So the price is up, the quantity in both Pan's case and Harmony Gold is up, and then it's the cost, the operational cost is down. So that those three variables makes a perfect recipe for increased headline earnings per share, and the headline earnings per share grew by 226%, which is massive.
And welcome back to another FinMeUp Stock Spotlight, where we cover the most important stock market news that happened during the week, as well as additional insights so that your investing journey is much easier. So getting into this video today, we're quickly going to look at our top stock picks for the year between Paul and myself. It's a friendly competition between the two of us. We choose our favorite stocks for the year, and if it goes down or up, we won't know. But so far, Paul is taking the lead. Last week, I was in the lead, but due to Bitcoin and Ethereum being his largest, one of his largest positions in his stock picks for the year, he outperformed me this week. So currently for the year, this was from 8th January, Paul's total stock pick portfolio is up 24.3%, with Bitcoin and Ethereum being the leaders of the gainers, as well as Pan-African, which is up 22%. And my portfolio is up 17.4%. Foresight had a bit of a pullback, but it's still up 50% from 8th January. So Foresight is taking the lead on my side, also with some Bitcoin and Ethereum going up, and also on holdings going up. Still waiting for that to be on Easy Equities, so help me to request it on Easy Equities. But anyway, so it's so far doing well. Any further insights on your picks so far? Are you happy with your performance? I mean, 24% in less than 2 months, less than 3 months is really impressive.
Yeah, I'm very happy. My baby is performing well. I think as I'm sitting here, I'm watching the prices, and it's just flirting with $63,000 per Bitcoin. Of course, we're recording on the Thursday, guys. So if it's something else, when you view this video, might be lower, might be higher, but I'm very happy. Of course, still my one bad apple is Impala, so we're betting on a turnaround narrative. But overall, man, Pan is rocking it up. Ether is doing super well, Bitcoin. So yeah, I'm happy, man. We're making some money.
Awesome. So if you want to see what those stock picks were, the video is in the description to the stock picks of both myself and Paul. And also, if you want to chat to Paul, who is a financial advisor, you can book a call in the description as well. It's free. It's a quick call. You can chat about investing, you can chat about bonds, you can chat about whatever you want to chat about in the investing field. There's an announcement coming soon as regards to myself, but that will be coming in the next few weeks, so stay tuned for that. And then final announcement before we get into the stock spotlight of it is Apple. They cancelled their decade-long effort to build an electric car. So I actually saw Elon Musk tweeting or Xing, I don't know what the new phrase is for that, about that, because it's been anticipated for long and they're letting that go. Anyway, so moving to South Africa, I want to give you an insight that didn't release any results this week, and that is my biggest JSE holding, and it's been now for many years. For those who've been following the channel will know. But that is Santova. So their year-end yesterday was 29 Feb, which was as today as we're recording. Tomorrow you'll think it was yesterday. But their year-end was now Feb. They are going to be releasing results on or about 15 May. And that is for their full year. If you look at their first 6 months of the year, which was end of August, they delivered some revenue growth, not a great earnings growth, investing back into growth. But a big theme of Santova is the shipping rate. So I just wanted to share an interesting insight with you. When the second half of their financial year started, the Drewry World Container Index was at 1,740. At 22 Feb, which was like a week ago, it was 3,659, which is an increase of 110% from just 6 months ago. So I am expecting, we'll see what impact the shipping rate has on Santova, but I'm expecting a much better second half of the year than the first year. So it will be interesting to see in the results. And the shipping rate is also up 93% year over year if we compare this time last year when the results came out. So it's going to be very interesting to see, because that is obviously more on the global front, and more than 70% of the earnings are offshore. So looking forward to the results. Make sure you are subscribed to the channel if you want to see that video so that you don't miss it when the results come out. We'll give some more insights. Moving on, Pick n Pay. So Pick n Pay is obviously one of the favorites if you look at the Easy Equities top buys during the month. I haven't been a fan of Pick n Pay for very long, and I'm still not a fan. But their total sales increased by 5.3%. Like-for-like sales only grew 2.9%. the net debt increased from 3.8 billion rand to 7.2 billion rand, so a lot of debt. They anticipate a loss at the earnings and headline earnings. Sean Summers, appointed as their CEO recently, will address the supermarket's underperformance. It's easy to say that. Let's look at the execution. And their board approved a 2-step recapitalization plan, which includes a rights offer and an IPO for their Boxer business. If you're in South Africa, you might have seen a Boxer store. And finally, their rights offer is expected in mid-2024, followed by the IPO towards the end of 2024 of Boxer. Paul, what do you make of these results?
Higgo, we're in trouble. We are in trouble. It's going to be difficult to turn the ship around. But like you mentioned, it is one of the most big stocks on easy equities week in, week out now for a couple of months. So people are betting on a turnaround narrative. But personally, like I've mentioned on this channel, I don't see it. I'm starting to see what is the competitive advantage. What is the game plan for Pick n Pay? Is it a unique product range? Is it a unique vibe when you get into the Pick n Pay? Is it low cost? What exactly do they bring to the market now that Shoprite, Checkers has established themselves? Woolworths has a very unique identity. I don't see it. And now with the rights issue, when you see a rights issue, I think our viewers might have some PTSD after the Purple Group rights issue. You get it at a lower price than the current market price. So you think, okay, I can buy more at a lower price, no brainer. But historically, 9 times out of 10, when a company issues a rights issue, the price is going to drop because then you're in trouble. You are in trouble, and yes, that's exactly what happened. So the share price dropped even more. Jothe, maybe you can show the last 10 years. They are now trading at the same price as they did in 2004. So if you invested in Pick n Pay 20 years ago, you would now trade flat minus all of those 6% a year inflation rate. So basically, you lost all of your money. So I wouldn't be surprised if we see even more rights issues in the future. Listen, happy to be proven wrong. Pick n Pay, any retailer, it's a tough game to be in. So if you can turn around, it will have my blessing. But I am not going to invest in this company. I'm staying far away.
Same. That's the same for me. I'm not investing in any retailers. Although once again, my pick of the retailers is Shoprite, but then again, the entire market knows that. Then the next company, also a retailer, love shopping there, not invested in them, and that is Woolworths. Their total group turnover fell by 16.7%, and the group headline earnings per share fell by 31%. Interim dividend also down 6.6%. You just think it's a general, the consumer is struggling, and we're seeing, that impacting because you've got inflation, high interest rates, bad economic conditions, not a lot of stimulation. So you've got that side, or is it maybe, you look at Shoprite and they're just stealing market share from everyone? It was the last time we touched on that, it was about 56 months or something of consecutive month-to-month gaining market share. Do you think that is also impacting Woolworths? Because if I take myself just out of a consumer perspective, I've started buying a lot more from 60/60 or from Checkers because of 60/60. Where I would have gone probably to a Woolworths close by and bought something there. So what's your take on that?
Yeah, I think you're exactly right, Higgo. There's like 3 main reasons that I can think of. Firstly, obviously, the consumer is struggling. Interest rates are high. Economy is struggling. So people don't have that much money. So they're going to buy a little bit less. Secondly, Shoprite, Checkers is hitting it out of the park, as we know. So they're stealing, especially the Checkers is now stealing a little bit of market share from Woolworths because Woolworths is those higher LSM kind of target market that they have. But now Checkers is also kind of catering to that market. So yes, Checkers is taking over then. And lastly, the clothing segment underperformed a little bit. So I've heard now that there's some people saying that maybe it should be a spin-off of Woolies. Maybe the clothing and the food should be like literally separate, maybe companies or subsidiaries. So yeah, I think those are the 3 main reasons. Not a investor in Woolies, Higgo, but as you know, I do like my Woolies to a lunchy there at FinMeUp offices, a Chuckles. Ooh, I'm a Woolies mama, but I'm not an investor.
Yeah, very interesting. The next company is Standard Bank. This is actually my pick of the financial companies. I don't follow the financial companies in that much detail, but from what I see, results in, results out, and where things stand, if you look at valuation, Standard Bank is my pick. But I'm not invested yet. I don't think I will be investing soon. Just out of putting that disclaimer out, just a reminder that this is not financial advice. We're just providing you with insights, and you must always do your own research. But their headline earnings per share is expected to grow by between 23 and 28%. So there's obviously a trading statement. But when the full results come out, it's going to be very interesting to see some of the other factors. For example, the credit losses, how much people are actually defaulting on their debt just because of the various economic factors. So what do you make of this? Because headline earnings per share growing by between 23 to 28%. That's proper. What do you make of Standard Bank and maybe just the financial industry in South Africa at the moment?
Yes, I think this is beautiful results from Standard Bank. Of course, at the moment, it's this double-edged sword for the banks where on the one hand, you have higher interest rates, and that's how you make money as a bank. You charge interest rates, so you're making more money. The problem is that because of the higher interest rates and the economy that's struggling, people are starting to default on their loans, and I have been for the last year. So that's what you said, the credit loss ratio, how many people are now struggling to repay the loans. And I think for most of the banking sector, I think we discussed this last year, it's not going to look that good this year, because I think the latter, the credit loss ratio, will have a higher impact than the higher interest rates. But in Standard Bank's case, they are doing very well. Also, I know that in the rest of Africa, the results are very, very good. So that obviously impacts the mothership here in South Africa.
Interesting. And now moving towards gold. Paul, one of your stock picks is in gold, and that is Pan-African Resources. But this is a different company. It's called Harmony Gold. Gold is obviously doing really well at the moment. The headline earnings per share grew by 226%. That is proper growth. 11% in their underground recovered grades, 5% decrease in group all-in sustaining cost. The revenue grew by 35%. So obviously the earnings per share growth is due to a factor of revenue growth. Revenue growing by 35%, headline earnings growing by 226%, and then an 18% increase in average gold prices received. So that is obviously assisting quantity times price equals revenue. So they produced more, they produced 14% more, and the prices of gold increased. So, and they also lowered their group costs. So overall, it looks really, really good. I don't know the gold industry that well, but Paul, I know you follow it more closely. So what can you tell us?
Wow, it's almost like we're recording this for the second time, because you're taking the words right out of my mouth. You're once again exactly right. So for any company, you get the revenue is the price times the quantity, and the profit is the revenue, which is price times quantity minus all the costs, so the operational cost. So in Harmony Gold's case, and also in Pan's case, most of the gold miners, the price is up a lot because gold is trading at proper prices, over $2,000 at the moment. The historical average is way lower, like 1,500 rand. So $1,500. So the price is up. The quantity in both Pan's case and Harmony Gold is up. And then it's the cost, the operational cost is down. So that those three variables makes a perfect recipe for increased headline earnings per share. And the headline earnings per share grew by 226%, which is massive. So maybe two quick comments on the gold price. Firstly, the gold price is up a lot. It's way above historical highs, as I mentioned. So where will it go from here? And I mean, the gold price is one of those debates in the finance world where everyone has a different opinion. For me, I don't think it will sustain at these levels for too long. I mean, it's so high. It will probably dwindle down to the long-term average. But who knows? If there's more uncertainty in the world, if there's a China, US, something, then the gold price will go up because people see it as a store of value. And, if poop hits the fan, I can always invest in gold because I know that's not going anywhere. And then secondly, the PGM basket. All the metals, everything is struggling. The commodities are getting hammered, except for gold. So that's doing very well. And maybe a last little comment is that I saw now that the gold ETFs the money is flowing out of gold ETFs into Bitcoin ETFs. And there's actually a stat that can prove that. Maybe John, you can show that. So maybe the boomers, the older people who invest in gold as a store of value now want some upside. Because remember, gold isn't really that exciting. It's just there and it's not going anywhere. And they're now looking for some upside. And they're actually putting their money in the Bitcoin ETF, which is quite interesting. Will this trend continue? Not sure, but it is an interesting phenomenon that we're seeing.
Yeah, there's a few older people that I've spoken to, all above 55. And when we speak about investments, a lot of them are asking how can they get involved in Bitcoin. None of them are asking in gold. So it is obviously part of that cycle. Everybody is speaking about Bitcoin again because it's going up. It's how it goes. And when it goes down, then the bears are saying everything. And then at the time, nobody says anything. But it is very interesting to watch the comparison between the inflows of gold, actual gold, and the digital digital gold called Bitcoin. Anyway, so next week we'll be back with more insights, more news to follow. Obviously, there's a lot of year-ends happening end of Feb, so results. There's going to be a lot of results over the next few months. So stay tuned for that. If you found some insights, consider liking. It really goes a long way. Remember, you can book a call with Paul, and also go check out the new FinMeUp baskets on Easy Equities, both the South African and the US. Maybe there's something for you, and just go look for it out of interest sake. Thanks for being with us every week. We'll be back next week. Cheers.